Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Thursday, the first day of February 2018, just getting on to 4:15 p.m. Central Standard Time. Didn't have the prettiest close in silver, but I can tell you the last trade of the day was at the 1721 plus area. The gold market was higher than this, probably over the 1350 area. What happened is we saw the Apple earnings, it slipped back, but also you're getting offers in these bonds and notes kicking real interest rates up, and it's weighing on the stock market and thinking it is not supporting the dollar. The dollar, as interest rates continue to climb, continues to weaken. And the thought process is too high of interest rates or too quick of a pace getting there. What that does to the dollar, because the economy might slow down more than they think, could hurt it. Whereas you still have strong economies. And in fact, in the euro today, one of the head economists of the European Central Bank came out, and he is fully in favor of the bank not removing the easing policy that it has right now. Had no impact. That normally you'd say, they're not going to move to money tightening. Maybe that hurts it. Market up pretty strong. So no, those aren't the things going on. They're looking at where the cycles of business are in them all. In the gold market, I have not changed my opinion. This action still looks good. You went from low to high on closes on the weekly chart. Let's call it $107. You've backed off from there about $8, $9 on a closing basis. I don't see that thrust having ended on this. When I take a look at a daily area chart of closes, you pulled back, couldn't quite get to that 18-day average of closes. Now, there could be a negative here. If the market were to now close over it, you could say, 1368, and you got up here into this 1348 level, and you broke back and you closed under, the chart's looking bad. I can see that argument. I can flip that argument and say, we've had successful tests at higher lows and the market's resuming its uptrend. Which camp do you want to live in? This correction came down. I know the Wall Street Journal was asking me what I thought, and I said, I just see a correction. I don't see a change of the bigger trend. Gold still looks like it's bullish. And I argue that it still has a continuing pattern of higher lows and higher highs. Break that pattern, and I'll say it went back to neutral. Until it's broken, it ain't broken. You don't fix what isn't broken. And as you can see, the 18-day average is doing just what I was hoping. It is holding this market together. If it can lift up, what number do you think becomes the next resistance? I'm praying you say 1365. And that brings me into, I'm thinking, we're still working on our webinar. I haven't forgotten any of you, and I'm probably going to get invites out no later than tomorrow or early next week, and we'll begin them at that point. I have tried two big pieces of software. I like one of them more than the other for ease of use. I like one of them more than the other because of cost. And you always take cost into impact, especially if I'm not charging you to come into the free chart room. But higher lows, higher highs. Okay, still like it. Momentum-wise, we see divergence. It is still pointing down, slightly starting the arc. Could momentum turn up? Well, if it does, then maybe you get up to this level. If it stays down and prices get under 1335.50, could be a real problem for this market. Lower highs, lower lows. Then the 1315 area comes in. My job here is to show you all the stories. In the gold ETF, you ended the downtrend of lower highs, lower lows. The market found its support at what line? Remember what I call the red line? The line in the sand? That's what it did. And often you get over a Bollinger Band, and if you're going to regroup, that could be one of the areas. Momentum is down, but starting to, if you will, slide sideways right here. Not trending. That's what you're doing. What about in the gold GDX? higher high, lower low, still under the 18-day average of closes. And on this formation, there's nothing that can turn the market up. Could you negate the downside bias by closing over 23.79? Yes, you could. If the market breaks further, is support 23.13 to 22.99? Yes, it is. But you got to first turn the momentum of the market. It hasn't done it. The gold-silver ratio still on the close picked up again, and now this down thrust I will take with the close today and say it's back into an up thrust until this low that I'm pointing at is taken out. So I'm leaving this to show you what it is, and then I'm going to change it on you. In the silver, I was happy with the support if you've still got the overall bullish feel to silver if you're a bull. Higher lows, higher highs. So that still keeps me in the bull camp. The market closed over the 18-day average. That keeps me in the bull camp. You've corrected past tense and overbought condition, and now you're starting to flatten out momentum. To get this market going, you have to take out 1737 right up here. And I think that's 37. Let's just check. Yeah, 1737.5. That puts in line the 1752.5. And I keep watching this overall sideways action. From sideways action comes moves. Now, Goldman, the big Goldman Sachs, came out and they are overweighting their clients in commodities. They think commodity prices as a whole are historically cheap. They haven't seen these type of looks or opportunities, that maybe they'll call them, since 2008. They like that, and I read a lot of their note, they like that world economies are picking up, that a number of commodities, storage, the amount in storage, the amount of the commodity, do they warrant some of the prices that we have right now? So they are getting more aggressive in this arena. I don't know if they're right or wrong. I'm not giving you that because they're Goldman, they're right. I've seen them wrong plenty of times. But they like what they're seeing in energies. I understand they like what they're seeing in the metals. We'll see what happens. As a chartist, I'd like to see this market start making that pattern of higher highs, higher lows. I liked what copper did today. It had been in a downtrend. All it need do now is take out right here, 323.30. And you'd suddenly have higher lows, higher highs, and the 325.70, 80 level would come into play up there. This market is just going sideways again, and I'm noticing this in the metals, one after the other. The platinum market, unless you take out today's lows, this was a successful test of the 18-day average. You have an outside day up. Now, if you take out today's lows, that's an outside day up. That would be what I call a bull trap. If that's taken out, the next number under it that's closest to price is 972.40. That could become what we call an active, quote-unquote, number. Don't take it out and move from here. Could you be going back to the upper Bollinger Band? My definition is higher lows, higher highs, bullish. Bias up because you're over the 18-day average, but momentum is still pointing down, so not everything has come quite together. In the palladium market, now you got 3 days in a row under the lower Bollinger Band. Too much storage, called supplies above ground of this, and that has been weighing on this market now for about a week and a half. You are oversold. You're getting excessive. I would only expect 5 days at most under the palladium before we get a bounce away from the right-hand side. I give it a 2% chance tomorrow of staying under the band. Why? The reason is because only 5% of the time do you close above or under lower Bollinger Bands. However, my rule of thumb is each one of those successive days is one of those percentage points. Can you go more? Yes. I'm giving you rules of thumb. That's all that I'm saying. And if you'll do your own exercise and go back and count, you'll see. Does that mean this is a buy? No. Getting back to the right-hand side is not a buy signal. It's just not excessive on the downside. Very big difference. There is nothing on this chart that is screaming, come out and buy me. In the dollar index, the downtrend continues, which makes metals cheaper. Lower highs, lower lows, embedded reading, bias down. Get nervous if today's high of 89.17 is taken out either Friday or Monday. Without that, you're still targeting the lower Bollinger Band, and you should still be very much into the bear camp. Modern Trader magazine. Let's talk about your free one-year subscription if you haven't received it from them yet. You want to take advantage. This won't last forever. The free offers that I was making for you on more research, that came to an end. I heard from them yesterday. They've ended the free party. So if you didn't take advantage of your offers through us, can't offer it. Don't know how long this will last. People come and go. The companies make changes. But their magazine, phenomenal. The 2018 projections for the February issue, talking about one of the things I talk about, the Bolinger bands. They have a bump and run strategy. Here you go with some of the stories and what they look like at this point in time. Then you can get, this is the stochastic story that they have. It's something you should get, and you should get regularly. Plus, their daily market focus is short-term stories, charts and all about today's action. How do you get this? Call us, go to our website. You can click right up here if you're watching me on YouTube, or underneath us on many websites it says click here for Ira's free information. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow. Take care now.